All right, delighted to have Tim Draper and Michael Sonnenshein with us today. And you all know probably Tim Draper as a legendary Silicon Valley VC. Michael Sonnenshein is the recently minted, and I'll use minted as the pun for some of you in the audience who get the term, CEO of Grayscale Investments. Guys, thanks for being here.
Hey, thanks for having us, Dan. This is great fun. Fun to be on a panel with you, Michael.
Great to be here.
So let's start it this way, guys. You know, just yesterday I was doing a panel at a conference that was all DeFi folks. And these were the people who are fully down the rabbit hole of DeFi investing, yield farming, staking. But I've been told by Jamie Montgomery that we have a kind of broader audience today, which I think is great. So we can zoom out and sort of start at a macro bird's eye level. You know, Tim, I'll start with you. Narratives are so important in this space. And really amid the pandemic, first Bitcoin started to surge. And then really the whole space accelerated and came back to the fore. You started to hear big names on Wall Street change their tune about the space. You know, just now when we were chatting before we came on, I heard you say that bankers used to poo-poo this, and now you hear a lot of them changing your tune, and yet Bitcoin hasn't changed. What would you say, Tim, has changed that has caused a lot of previous skeptics to change their thinking about crypto?
Well, I think it's been a long march. It's been a long drumbeat that just keeps coming and keeps coming. Bitcoin gets stronger and stronger every day, and there are more and more applications built around Bitcoin every day. OpenNode is making it so retailers can take Bitcoin. They don't have to pay the banks 2.5% to 4% every time you swipe your credit card. People have been doing remittance, but now they're also doing they can pay people overseas. Bitwage makes it easy for people to pay overseas. The accounting is starting to get in place so that you can account for something with Bitcoin and then convert it back to dollars for paying taxes or for whatever. And then in addition, the dollar is being printed like wild, like toilet paper, and it's just they're making as many dollars as they possibly can to save the economy while they've locked it down, and in doing so, they're making the dollar worth less. And since it's worth less, people are recognizing that that they can own Bitcoin as an alternate, as a hedge against inflation, which I think they believe is coming. And now fiduciaries are saying, if I don't hold Bitcoin, I'm going to lose my job, because it's this extra, it's an alternative asset that we have to have that doesn't flow with any of these other assets, but it does hedge against bad government, overbearing government, the printing of money. It hedges against that, and it also is this amazing global currency that can be accepted anywhere and across border. And as we go from being a tribal society that's sort of to this anthropological leap to a global society, we are going to want a global currency that is open to everyone, and Bitcoin is there for us. And there's also this trust thing. Turns out governments do much better for their people if they're trustworthy. But trust, now the trust around Bitcoin is better than the trust around most governments, because the whole mining system, the whole setup for monitoring and keeping track of the blockchain has been a real confidence builder. And while banks are getting hacked every day, no one to date has, knock on wood, has hacked the Bitcoin blockchain. So it is a very secure, very certain trust system. So that third party of trust that a banker has always been for all those years is now being replaced by one that you can trust more. So this is a really exciting time. And So that naturally will bring in the institutions. And I think the banks grudgingly have kind of gone, okay, now they've gone through all the 7 levels of pain, and now they're in acceptance.
Now, Michael, Tim mentioned that the institutions have come in, and many people at the beginning of this, really, I'd say November, December, when it really started to dramatically accelerate, people said, well, this time it's different. This time is different from 2017, and that's because it's been institutional driven. And that has been the case. There have been multiple types of institutions, and yet it's both, really. It's institutional driven, but that's not to say that it hasn't been retail investors. And it seems to me that during the pandemic, there was a nice convergence with the retail investor revolution. I mean, everything that happened with social media and Reddit and GameStop was not completely unrelated to the rise we've seen in cryptocurrency buying.
Sure.
What have you guys seen amid the pandemic that has really evolved the narratives?
Well, I think it's important to hit on a couple of things that you each said. One, the Bitcoin rally, the digital asset rally that has been taking place throughout 2020 and carrying into this year really does look and feel different than it did in 2017. We are now using and amidst a digital asset market that is far more mature. We did not have the development of derivatives. We did not have the development of lending and borrowing. We did not have all of the on-ramps and off-ramps into this ecosystem that now exist. And so it's become a much healthier and a much more two-sided market. I think one of the things that Tim definitely hit on, which is so true, which is that the career risk that was once related to getting involved in this asset class has been completely shrugged off. And it's actually become, how can you not pay attention to this asset class, as opposed to why would you ever pay attention to this asset class? And so when I think about at Grayscale, being an asset manager and being the dominant asset manager in the space and largely serving institutions, we're certainly hearing, I guess, Dan, a couple of things from them. One is the thing that Tim hit on, which is this idea of verifiable scarcity, that Bitcoin is a verifiably scarce asset, and that it really creates a juxtaposition between its scarcity and the perpetual printing of the US dollar. And so there is a propensity of investors to want to own scarce assets, particularly in an environment like this. I also think what's different this time around is who else has been involved. For once, it's not just folks like Tim and folks like myself kind of running around touting Bitcoin as a great investment or a new technology. You now have really famous and experienced investors like Paul Tudor Jones and Stanley Druckenmiller and Bill Miller and others very publicly getting involved in the space. And when you add to that the fact now that we've seen corporates adding Bitcoin to their treasury programs, you really create an environment unlike any that we've seen before. And so when you think about the pandemic and the rise of social media really relating to the investment universe, there has certainly been a propensity of investors to also not only get involved in stocks, but also get involved in digital assets as well. And so we've never seen the market have a market cap of this size or see the types of daily liquidity that it now has.
And of course, you guys, Michael mentioned and alluded to the kind of stigma that there once was. And I do think a lot of that has faded, although let's be real that there's still a huge number of people, and I think that people in this space, people who live and breathe crypto can forget this, who still have trouble kind of wrapping their minds around how this stuff works. And they say, so it was created a decade ago and it was created by someone and we don't know who they were. And you really have to get kind of basic with them. Tim, I guess I'd ask you, surely you have some peers who are still skeptics about this stuff. And I'd ask you how you explain to them simply for a layperson the appeal, because what everyone used to say in the early days is that where we really want blockchain tech to get to is people will be using it or benefiting from it without needing to understand it. Everyone used to say, you don't understand HTTPS, you don't understand SMTTP, you just know that the internet works and email works, and eventually we'll get there with blockchain. We're not quite there yet. We got to reduce a lot of the friction. So how do you explain it, Tim, when people ask you, why crypto?
So I think of various stories of people who come out and they say, hey, we got, I gave away 1 Bitcoin to everybody who came and spoke at Draper University. And that was when they were worth $200. And I just had a great conversation with Harris Barton where he said, we just tore the house apart looking for that Bitcoin. You know, they were the Cascacious coins. He said, we just tore the house apart looking for that Bitcoin, realizing it's now, my speaking engagement was a $50,000 engagement. It's that kind of story that gets people starting to think, oh, okay, this is real money. It's really serious. Another friend of mine said, well, as soon as I can buy something with this, then I'll believe you, Draper. And I said, well, you know, I just was talking to Stanford, and they said, you know, and I was offering to give them some money for a business plan competition. And they said, no, we want Bitcoin. And I thought, wow, that's interesting. And then I'm noticing in buying real estate that people are always taking Bitcoin as an alternative. In buying cars, you now, of course, can buy a Tesla for Bitcoin. I think all these things are making it so that they are starting to feel like, oh, this is real currency. This is something I can use. And it's not like, it's not as clear to an American. It wasn't as clear to an American. Now it is, now that we're printing all this money. It wasn't as clear to an American as it was to, say, an Argentinian, where the peso drops 75% a year like clockwork. So nobody has any faith in the peso. It's like a hot potato. It makes them think they were way ahead of us in our thinking. Nigeria too, way ahead of the U.S. in their thinking about, oh wow, this is a currency that does not inflate. And
but it's important though, Tim, don't you think that sometimes people tell you, you know, Bitcoin failed because they're not buying a latte with Bitcoin? Right. You know, that narrative kind of drives me nuts because I think, you know, to your point, talking about nations that are experiencing hyperinflation, Bitcoin hasn't failed because us as Americans living in the developed world with tons of financial services, we're not advocating for a use case for Bitcoin in the near term where you're going to use it in everyday, you know, commerce or, you know, doing your grocery run or running errands. What Tim and I often probably hear most is investors thinking about Bitcoin as a digital gold or a digital store of value. And that's a narrative that I think has been very widely held at this point.
Well, and I want to ask
I think that's the one that's actually come to fruition where people are going, yeah, I need that. Instead of gold, which is like, why would you ever want gold? People come to me and they say, well, when are you going to sell your Bitcoin? And I say, into what? I've got the currency of the future. Why would I want to transfer that and change that into the currency of the past, which is like the dollar or gold to go way back into time? Why not use a currency that's going to be the future? And, you know, with OpenNode has now opened up the ability for retailers to accept Bitcoin and not pay the banks 2.5% to 4%. I think that is the beginning of when people realize that, oh, I can actually buy things like the latte with my Bitcoin. So that's kind of, it's all coming. And as it comes, it spreads. And as it spreads, it becomes more valuable, you know, according to the Metcalfe's law, the network grows exponentially and the value of the network grows. No, as the network grows linearly, the value of the network grows exponentially. So well, this is clearly, I mean, why would I ever want to sell my Bitcoin into something that I don't even think people are going to use? It'll be like, you know, that old guy or the old lady with a coin purse pulling out their pennies to get their latte. That'll be the person who is trying to pay in dollars for their Starbucks in 5 years. In 5 years, Starbucks will just be going, here, there's my, here's my QR code and, here's my identity and boom. And it'll just happen like clockwork. In fact, if I had to send you money today, I wouldn't even know how to send you dollars. It's like, I got to call my assistant. She'll call the bank. They'll have to set up a wire. If the bank's if it's past 2 o'clock, sorry, the wire doesn't go. All these things. If I want to send you Bitcoin, boom, done.
Yeah.
It just happens.
Well,
so all these things, people are going to start to recognize that this is just better currency. And it's not tied to any political force, any government deciding that, swinging one way or another on how much money they're going to print. And it's funny. It's not just hey, it's a new currency and it's better than the old currency. It's almost an anthropological leap forward, where we're able to now do business cross-border easily. We can send money that way. We all recognize that money. And you can take that to another, there is going to be another leap, and that is when, if we're all working on Zoom, then working in America with all the protections they give you and all of that, you are going to be the least attractive employee to hire, because we are going to be able to hire from anywhere and pay them in Bitcoin. And they don't have all these rules like you got to take this test and do this and do this and do this for all your employees. I think America's going to be at a huge disadvantage if we don't deregulate.
And Tim, I want to push you guys on something that was said. You brought up the fact that a lot of skeptics still say, well, I really can't pay for a cup of coffee with it. The Bitcoin believers say, well, that's not the point anymore. It's digital gold. Michael, you guys at Grayscale a few years ago ran a TV ad campaign saying drop gold for Bitcoin. I guess I'd ask you though, A, is it really exciting enough if it's just digital gold? I mean, is that enough of the promise of Bitcoin, which I think it's at least fair to mention, the original white paper said a peer-to-peer electronic cash system. And right now, it's not being used that way. PayPal came out and said, we're going to allow people to pay in crypto. Tesla, as Tim said we're going to allow you to buy a car in crypto. Right now, no one would want to do that because the value keeps going up. You wouldn't want to spend your crypto.
So, it is a fair question. I think that certainly the developed world use case at the moment is around a digital gold or a digital store of value. It is certainly a speculative investment for folks in that regard. And it can be super volatile. And we tend to see people want to own Bitcoin or express owning Bitcoin over medium to longer term time horizons. But even despite its unbelievable price performance, I mean, this has been one of the best performing, if not the best performing asset of the last decade. It still now probably only sits at around 10% of the market cap of gold. And so many folks would believe that there's still a lot more room to run. And that's just looking at one singular use case for Bitcoin, right? It's Bitcoin taking share of the gold market. We looked, I think during the fourth quarter of last year, gold investment products saw some of the largest outflows ever on record, ever. And that was at the same time that Bitcoin really took off to new all-time highs. And we don't think that that is the least bit, coincidental. We're just at the beginning of what will be, I guess, what many dub the great wealth transfer, Dan. $68 trillion of wealth moving from older generations down to younger generations, millennials and folks that were raised in an era of Instagram and Venmo and credit card points and Bitcoin. And so I'm not going to, share or believe that, Bitcoin is going to somehow be the recipient of all $68 trillion. But I would venture to guess, as assets get passed down from one generation to the next, that it is going to be repostured, and that digital currencies like Bitcoin will be one of the beneficiaries. But that's not to say that we won't see Bitcoin continue to develop other use cases. Micropayments, micro-lending, micro-financing. I mean, the divisibility factor of Bitcoin gives rise to applications that, to Tim's point, the traditional financial system just cannot offer us today, which is why, I think so many investors are so excited about getting involved with it.
Yeah, the possibility for things like micropayments online certainly excites me. You know, at Decrypt, we are looking into that with a reader reward token. And it's exciting what it might mean for paying for content online and for journalism. Tim, we've been dancing around one big topic right now. We've talked about Tesla, which bought $1.5 billion worth of Bitcoin. We've been talking about PayPal. Square bought Bitcoin for its balance sheet. Just today, we reported at Decrypt that PayPal isn't about to do that yet. You recently, Tim, suggested that you think the next company to do that could be Netflix. And I guess I'd push you on this because there are a lot of investors out there, you know, mainstream traditional Wall Street types who say, this doesn't make much sense to me. I mean, okay, a big company could buy Bitcoin and then in a quarter they say, look, it gained and we gained more cash. Great. But it really has nothing to do with the underlying business. What do you make of these big companies embracing purchasing Bitcoin for their treasuries?
Well, I think if you're a CFO of a big company that has a lot of cash, you're watching as the dollar is going to drift down, and you've got a lot of dollars, and you're saying, well, wait, I need to hedge against this. You're going to see the dollar drift down, and then you're going to go, wait, I need to do something here. The more bold entrepreneurial companies that have grown to great stakes, they realize that they can take a bold move and take a lot of their cash and put it into Bitcoin. These larger companies are usually a little bit more conservative, but they're going to be looking and going, oh, look at the cash. I mean, Apple has cash, so much cash. If they don't buy something with that, their shareholders are going to naturally drift lower in the value of that asset over the next 3 or 4 years because we've printed so much of it.
I don't see Apple doing it, Tim. Do you? I don't see Apple buying Bitcoin.
Well, not right now. I mean, I think, Zuckerberg wants to emulate it. He wants to create his own. But then, of course, it's centralized, so it loses that decentralized value that you get from being a global currency that's decentralized. And Apple, they want everybody to go on Apple Pay. Well, I think they're going to eventually say, well, we should accept Bitcoin in Apple Pay. And you mentioned that the price of Bitcoin keeps going up, and so people don't want to spend it on their these little products, the smaller coffees or whatever. That'll come and go as Bitcoin goes up and down. I think in general, people will try to acquire and own more Bitcoin and move slowly away from dollars as more products are available to be bought with Bitcoin. And as that transition happens, you're going to see people shrinking their dollar wallet and growing their Bitcoin wallets. I mean, that's the way I manage my money. I want to make sure that I've got enough dollars to pay my capital calls for all my venture activities. But after that, it's like, well, I need to buy more Bitcoin. So when I have a big win or whatever, I take it and I move it into Bitcoin. Now I have, you love the micropayments. I have this long-term vision for venture capital that I hope happens soon, where I can raise a fund completely in Bitcoin. I invest in all my portfolio companies in Bitcoin. They pay their employees and suppliers all in Bitcoin. We put the whole thing on a smart contract. They keep perfect records on the blockchain. And anytime one of those companies becomes liquid, that money then drops into the waterfall and drops into all of my investors' hands in their ratio, and it all happens automatically. I need no audit. I need no accounting system. I need no bookkeeper. I need no transfer agent. It can all be done in that one controlled environment. And then, of course, the way Carta has grown, this system can grow starting from the venture business and grow to the rest of the economy, where we're all using Bitcoin. And that way, the blockchain keeps perfect records. So you don't have a need to pay your accountant, $1 million. to just check the numbers that are already done on the blockchain. And as we get identity nailed, where people always know who it is sending the money, taking the money, whatever. Once that's nailed, and we're getting there, Unum ID is working on something that's very simple, no passwords, no nothing, and they will know it's you. Then the hacking and the people around the edges who are trying to steal, they go away. And suddenly we have a system of trust. And as you know, trust creates huge wealth. The more trusting around a system, the more wealthy a country. The less trusting around a system, the less trusting the country. So now we'll have true trust, and that will build the whole world economy at an incredible rate.
I don't know if it'll be Netflix.
So exciting. I mean, I hope you guys feel this. It is so exciting.
It is. I don't know if it'll be Netflix that is next, but when, I think you'll see over the course of this year, over 2021, I mean, the companies that so far have added Bitcoin to their treasury, generally speaking, I'd construe them as companies being led by visionaries, Elon Musk, Jack Dorsey, Michael Saylor, these kinds of folks. The companies themselves, their business models, their products and services are disruptors and are real innovators in their respective categories. So I am not surprised to see those types of leaders or businesses embrace what has clearly, become a technology that is really reshaping and reconstituting what we consider money. And for the first time, we have a global mechanism, to Tim's point about trust, a global consensus mechanism that's honestly more powerful than almost any other technology that we've ever used. And I would say over the course of 2021, you're going to start to see other companies that may not be as visionary or as disruptive begin to allocate to Bitcoin on their balance sheets. We could speculate that a company like Apple maybe should, because they hold so much cash. And if, to Tim's point, the cash is being printed like toilet paper, then maybe you shouldn't be holding on to as much cash, and you should be diversifying that exposure into new return streams like Bitcoin. In an environment that's super low yielding, I think as a corporate treasurer now, there is no longer the risk involved in thinking about diversifying some of your treasury program into an asset like this. Now, I think one of the knock-on effects of doing this, which has, I think, frustrated me and quite a few folks in the Bitcoin community, is the fact that when a company does in fact make these allocations, number one, they are generally a small allocation. $1 billion on Tesla's balance sheet is not something that's sizable. But what unfortunately ends up happening is that the associated common stock of that company starts being traded as though it is a barometer for Bitcoin. And it really starts to have a meaningful departure from actually the way that stock should actually be valued based on its cash flows and ability to operate as a business. So it'll be interesting to see whether or not that trend continues and if the investment community continues to digest these moves by companies in that manner. But I certainly think you will see a lot more companies allocating to Bitcoin on their balance sheets this year.
And guys, I'm glad we're talking about this, whether and when a large number of people might actually pay in crypto. It's true to the name of our panel here, the future of crypto. Some people, Tim, we were talking about whether you'd want to spend it. Right now, the value is going up, up, up. Why would you want to spend it? Well, some people say, okay, so then Bitcoin, which is the original, the OG, that remains maybe even in the long term digital gold. We were just talking earlier at Decrypt with Mark Cuban, and he said, I think Bitcoin is kind of stuck with store of value. Some people predict Bitcoin remains digital gold, but in the future, you transact in some of these other digital currencies, altcoins. And Tim, I wanted to toss the question to you because you've sort of revealed recently that you have bought a number of these different coins. It's not just Bitcoin. You've bought Tezos, you've bought XRP, or as it was once called, Ripple from that company. Some of these different coins, and I guess I'd ask you, they're not all going to survive, right? There are so many. There are now thousands of different cryptocurrencies. But in general, if you look at the top by market cap, the top 5 or 10 remain somewhat the same most days. They're not all going to still be here in a decade or in 20 years. What do you see as the future for the uses of these altcoins beyond just Bitcoin and Ethereum?
Well, I look at the altcoins and I think, yeah, I think it's all going to be, most of the whole thing is going to be Bitcoin. And it's not just digital gold. It's people are going to be able to transact with it and move it around, and they're going to use it as currency. And it's just a matter of time. And it's kind of a funny irony that they don't want to spend it, so they're not buying it, as opposed to they should be buying it because then they won't want to spend it. But eventually they'll be able to spend it and feel pretty good about spending it. But the altcoins, I think, whenever I see a great system where there's some really good engineers working on a problem and creating something of value, I'm always really interested in the teams. And so I look and I say, yeah, Tezos has an amazing group of engineers working on building smart contracts, and that program is light touch, requires less energy because they use proof of stake rather than proof of work. And yes, it's a really brilliant team going after it. Aragon, same kind of thing. They got a brilliant team going after something that's sort of going to decentralize government and create kind of a liquid democracy. You see, when you see that kind of thing happening as a venture capitalist, you say, how do I back it? How do I help grow it and build it? So I think, yeah, we got Bitcoin, but there are these amazing technologies that came out of Bitcoin, that blockchain and smart contracts. And then you can combine those with, artificial intelligence and surveillance, and you can actually transform the biggest industries in the world, whether it be insurance, banking, finance, commerce, government, healthcare. They can all be transformed with these new technologies that have come along. And a lot of that will be done through Bitcoin because it's really prevalent. But people have argued that, Bitcoin, Ethereum, XRP, Bitcoin Cash, whatever, all the way down are the equivalent of the future of what is today the dollar, the yen, the euro, the renminbi, the whatever. So these are now the global currencies, the ones that are not tied to a geographic monopoly. They are the currencies of the future, and so that's what we're seeing. And as a venture capitalist, yeah, I made the right bet on the real winner. And then there are all these others that can provide great value to us. I mean, just because there's Amazon doesn't mean there aren't a lot of.
And I think that's right, Tim. I think when we talk to investors, and at Grayscale, we're certainly involved in a handful of different digital assets, but while Bitcoin probably still is most investors' first investment into this asset class, there is certainly a trend towards diversification and investors realizing that there are diversification benefits of owning Bitcoin as part of a portfolio. But there is also benefits to having diversity within your digital currency allocation. And I think while, Tim and I are probably some of the biggest Bitcoin bulls out there, and still believe that it is early days and there's plenty of opportunity in Bitcoin. I would say I am generally of the belief that there is a future state where there are several digital currencies that kind of all maintain sufficient market share. They have differentiated use cases, different prices. And I kind of boil that down for folks by thinking about like the precious metals family, not to kind of harp on gold again, but gold, silver, platinum, palladium, they're all part of the precious metals family, but they all have different use cases, different addressable markets, different prices. And so I would venture to say that when some of the dust settles and there's a little bit less fervor and excitement on constantly innovating or inventing a Bitcoin killer or a, whatever else may be coming along, I think that there will be several digital currencies that can occupy different use cases and coexist.
And, when you say it's still early days, Michael, I'm glad you said that. And Tim, I'm sure you'd agree. It's still so new to a lot of people. And again, with this crowd, we won't necessarily talk NFTs, which are exploding, and smart contracts and go down that route. We could do a whole additional, separate panel. But I just think even that, I mean, that's so new, and that's within the larger industry, which itself is still so new. And to that point, I was looking already at some of our audience questions. Boy, one you hear constantly from people who are still iffy on the whole space is about Bitcoin and its energy use. They say, well, doesn't the mining, take up so much energy use? And I'm sure both of you have heard that from people. What do you say about that? People say, isn't it bad for the environment? I mean, when Tesla came out, people said, I thought Elon Musk cares about the environment.
I think people have been saying that, Dan, because it's a misconception, certainly, but two, because I think ESG has become such a meaningful part of folks' investment allocations in the near term and over longer time horizons. I will say, based on the statistics that I see and being within the industry itself, I want to say now it's about north of 80% of Bitcoin mining, which is certainly electricity intensive, is actually done through renewable energy sources. So this is hydro, wind, you name it. But there is a very big misconception out there that somehow the Bitcoin mining rigs all over the world are somehow melting the polar caps, and that could just not be further from the truth.
It is interesting. Not only is that happening, but because of this, people have figured out how to create cheaper energy. They have found where you can get, energy for 2 cents a kilowatt hour. They have figured out new ways of tapping into natural resources. They've found out where the best solar panels can operate, where the best wind props can operate. Where the other thing is that that's going to stabilize. The amount of energy used is going to stabilize or even drop down significantly, because as Moore's law comes along, they use fewer. The transistor takes less energy to switch. And as that drops, it will decrease the amount of energy required. The other thing is that the miners get smaller and smaller pieces of Bitcoin as time goes on. And so there will be less and less energy required for that. Now they will push for it, because as Bitcoin price goes up and the amount of money they get from mining goes down, the amount of Bitcoin goes down, that will be always a very competitive field. And so the ones who have figured out the cheapest energy sources, the best way of operating, the furthest down the Moore's law curve, those are going to be the winners in that world. So I think that, that's old. It's really old news. And it's like the news that Bitcoin is for criminals. That is very old news, because now everybody realizes that the blockchain keeps perfect records. And so, like, the US Marshal's Office figured out this very quickly, that they want criminals to try to do it in Bitcoin, because they catch them every time. So if you want to be a criminal, you use cash, you use dollars. And so it, all those old arguments they keep coming up, and I keep thinking, what are you thinking? People aren't making the leaps that are happening. One thing you haven't asked about is Janet Yellen, who's the new Treasury Secretary. But she used to be the head of the Fed. Well, look, when you're the head of the Fed, you're managing everybody's dollars. You're looking at this new currency that's better, faster, cheaper, decentralized, open, transparent, frictionless. And you're going, whoa, this is scary to the Fed. Well, but now she's the head of the Treasury. She has to look out for the entire country. She has to weigh things like, wait, this is good for innovation. This is good for technology. This moves America forward. She has to be thinking broader than she did when she was just the head of the Fed. And I think that that kind of thinking is going to start to permeate as people get rid of all the myths and they start thinking about what are the opportunities here, what can we do, and how do we attract the great entrepreneurs of the world? How do we attract the great brains of the world? How do we attract the money of the world? We do that by, making Bitcoin a national currency the way Japan did.
Well, I'm glad you talk about some of the myths, Tim, because I think a good question to squeeze in the time we have left for Michael. A lot of people in this room attending this event are investors, whether they are career investors or just regular folks, retail investors with money to invest. And Michael, you guys at Grayscale have offered various investment vehicles, over the counter. You've had GBTC, which has gotten a lot of attention. Now more and more investment opportunities are coming, ways for people to get exposure to Bitcoin without having to buy it. A lot of people, the hesitation is, I don't want to have to worry about how to buy it. It seems confusing. So Coinbase is going to be doing its direct listing very soon. A lot of people think that that's going to kill it as a public company. People will see that as a way to get into crypto. We're waiting on a Bitcoin ETF. Canada already has 2 of them. As you look at these new options out there, what does that mean competitively for Grayscale?
We view, as we long have been, any other means or access that investors can have to this asset class as actually cooperative, not competitive. Grayscale has certainly created a foothold within the asset management industry for these for digital assets, now managing about $40 billion today. But we cannot be the only conduit to encourage or provide access to this asset class. And so if there are other products that come into the market, if you start to see legacy financial services firms who are typically leveraged for equities trading and bond trading, suddenly giving their investors the ability to access cryptocurrencies as easily as they do other investment instruments or currencies or commodities, we view all of that as additive and growing the pie altogether. I think certainly all eyes in the industry are on the Coinbase IPO, very much eager to see how that is received in the public market. It could very well lead to other initial public offerings of other digital asset businesses that have grown and matured and have become, close to household names. And, these days, I think the statistic, I don't want to butcher it, but I think it's like multiples of Schwab and TD and some of these other legacy players that Coinbase has in terms of actual end accounts and actual users on its platform. So definitely an interesting and exciting time to be involved in and investing in the asset class.
And at Draper Associates, we're exploring a lot of options like this. And as the regulators make it clearer, we can figure out how we can buy the assets, but also by the companies that are making more advancements in whether it's DeFi or NFTs or whatever. And so we're exploring that same kind of thing in a different way. And we really do want to allow people to come in who are not comfortable, buying from a new group, buying some Bitcoin or, trying to put a wallet together or whatever, and they just want to participate in the asset class. We're sort of thinking through the best way to do that ourselves.
Well,
so I think you've got a great opportunity as investors to participate here in the early days of some major change in the way the world's going to operate. This is going to really be exciting. And I'm Tim at Draper.vc. very few people put their email addresses out there in these conferences, but I do. And I do it for a reason. I always feel like there may be something out there that might, some entrepreneur out there, some investor out there that has this, might have some sort of a connection that I can make. And I spend all day Friday reading them all, so I do get to them. So anyway,
but you won't you won't be sending every attendee one Bitcoin today, though, nowadays.
No, but the early speakers at Draper University really made out like bandits.
Guys,
nobody knew how to sell that thing. So as long as they held on to that coin, and those coins are now worth more than the 50,000, they're worth like $60,000-$70,000 because they have a Bitcoin in them, but they're also sort of like a collector's item.
I should say, guys, we have a few more minutes, Tim, and I'm going to pull a couple questions for the audience, but there's one more I had. I'm glad you mentioned Janet Yellen, and Michael mentioned this too when we just spoke about the upcoming Coinbase listing. But regulation, has become a huge story in this space. I mean, maybe one of the two biggest stories probably of the year. And it looks as though a number of different US agencies want to have some kind of jurisdiction over Bitcoin. I mean, the IRS wants to know about it for your taxes. The CFTC sees it as having jurisdiction. The SEC has cracked down on all those ICO companies. And so I guess I'd ask how much of a risk this might be for the space, because people are all the way, Tim, you are to the moon. This is going to change everything. Well, what if the wrong sort of people or the people who have the bearish views end up setting the rules here?
Well, here's what's happened historically. When China said no more Bitcoin, they had a huge brain drain. They had a bunch of entrepreneurs leave. They lost Binance. They lost all these people, and they went to Japan and Malta and Singapore, places that were more accepting and lighter touch regulators. And I think that that's the risk that the regulators in the US are facing. They're saying, well, we want to regulate, but God, we don't, the best thing the US did in regulations really in history were that they hands off on the internet. And as a result, we got Amazon and Google and most of what Apple is and Netflix, all these great companies. And they all came because the US said, no, we're going to just let this go. I think the US is more concerned here because they're saying, wait, we control our people with our money. But the other group from the US are saying, well, we're a free people and we are our government. And what is the best way for us to advance and move forward? And there will be struggles there. I actually think that cooler heads will prevail, and people will say, okay, well, here's this is probably what we should do, but here's what's really going to happen. People are going to do business completely in Bitcoin. So the IRS is just going to go, well, look, if you do your business completely in Bitcoin, we're going to tax you the same way we would have if you had done your business completely in dollars. If you do your business in both, we're gonna make the accounting much more expensive to go back and forth. But longer term, I think the accounting, the taxes, all of that will be totally built on the blockchain, and the US is going to get richer because they're going to get more money from the taxes from the people who operate in Bitcoin than they would have with all, because it's automatic. It's built into the system. They could actually even tax transactions and forget everything else. They could just tax 0.02% on every transaction that goes through Bitcoin, and they could end up paying for everything.
We've come a long way though, Tim, right? Like from the days when you probably first started getting involved in Bitcoin, right? We've now seen guidance from the SEC and
Gary Gensler. He's a brilliant guy. I was on a panel with him. He taught blockchain at MIT. I mean, I think we've got the right elements that are going to come together and make this work for everybody.
but it's become regulatory clarity, not regulatory uncertainty, right? I think, Dan, if you asked me this question 18, 24 months ago, I'd tell you a lot of investors would tell me that maybe they'd be on the sidelines and not yet investing because there wasn't enough regulatory clarity. But when you have the SEC discussing, Bitcoin not being a security, the CFTC talking about Bitcoin as a commodity, the IRS issuing tax guidance, Treasury demonstrating their commentary, FinCEN, you now have a backdrop that I think many in the industry maybe is a little bit self-fulfilling, but we often feel that regulators have been very well engaged on this topic with us, and that they actually have made it pretty clear, at least in the near term, that they're not going to be enacting some entirely new suite of laws or regulations around these assets. Certainly Grayscale is an example of that, operating investment vehicles around this asset class within the existing regulatory framework. And there's countless, other businesses that are thriving and growing. We were just talking about Coinbase as well. So I think it's early days, but I'd say that regulatory uncertainty is probably morphed into regulatory clarity for most folks and is not something that inhibits their involvement, maybe that it once did.
And if it's not fears about the regulatory uncertainty, we only have just a precious, couple minutes left, but I'd ask each of you, when you hear from whether it's friends, clients, investors, peers, fellow VCs, for Tim, well, what is their biggest concern right now? For those who are still, what is it that they're afraid of?
Right now it's FOMO. Right now it's fear of missing out. And it's for the fiduciaries of the world, this is fear of messing up because they are not participating in this asset class. I think that's the one switch that has been turned, where now the fiduciary, to be a good fiduciary, you've really got to have exposure to Bitcoin, or your investors or whoever it is you manage the money for are going to ask the question, why did you let the dollars in our portfolio just continue to dwindle in an inflationary environment when you could have participated in this new asset class?
I think that what I think a lot of investors now struggle with is kind of whether crypto is right for them or not, right? I think there's now this general appreciation, and we're certainly advocates of this, that investors should really be looking at every investment opportunity available to them, but then certainly screening out what does kind of meet and fit their investment objectives and risk tolerance, et cetera, and screening out what doesn't. And if you decide that crypto is not for you because it's too volatile or the time associated with being invested in it, doesn't work for you, that's 100% fine. I think where investors probably encounter their next hurdle is kind of where it fits within their portfolio. Do they think about it like a venture capital investment? Do they think about it as an early stage technology investment? Do they rotate some of their gold portfolio into assets like Bitcoin? Or is this just going to become to occupy a slice of the pie chart that just never once existed? It'll be interesting to see as more products and services get built around this, where this ultimately fits in investor portfolios.
Going to be very interesting. We've got to wrap it up. Michael Sonnenshein of Grayscale, thank you so much. Tim Draper, thank you. Tim, if you want to remind all of the viewers of your email address, you can go ahead.
Tim@draper.vc. So
terrific.
First name at last name dot what I do.
Wow, he's reachable. He's reachable, guys. And I would give myself and my friends at Decrypt the plug with a couple seconds left. I hope everyone watching knows about Decrypt. We are one of the best crypto news sites out there. Check out our beautiful mobile app. And I mentioned earlier that we have a reader rewards token. So we are participating in this industry that we cover. And as you guys alluded to, I hope some very cool things come in terms of the uses of cryptocurrency for everyday applications. That's kind of the next level beyond just digital gold, right? So thank you to the Monty Summit and Jamie Montgomery, and thanks you guys.
Thanks, Jamie and Michael and Daniel. Fun being on the panel with you too. We should take the show on the road. I guess we have.
Post-pandemic, that's right.